Ladies and gentlemen, good day and welcome to the Rocking Deals Circular Economy Limited H1 FY25 earnings conference call hosted by Ventura Securities Limited. As a reminder, all participants will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star and then 0 on your touch-tone phone. Please note that this conference is being recorded. Before we begin, I would like to point out that this conference call may contain forward-looking statements about the company, which are based on the belief, opinions, and expectations of the company as on date of this call. These statements do not guarantee the future performance of the company and it may involve risks and uncertainties that are difficult to predict. I would now like to hand the conference over to Kaushal from Confideleap Partners IR. Thank you and over to you, Kaushal.
Thank you. Good day, ladies and gentlemen. On behalf of Ventura Securities Limited and Confideleap Partners, I welcome you all to Rocking Deals Circular Economy Limited H1 FY25 earnings conference call. The company is today represented by Mr. Aman Preet, Founder and Chief Executive Officer, and Mr. Jitendra Verma, Chief Financial Officer. I would now like to hand over the call to Mr. Aman for his opening remarks. Thank you and over to you, sir.
Thank you so much for passing it on to me. Thank you. I'll start with the opening remarks for H1 FY25. Ladies and gentlemen, a warm welcome to each one of you gathered for the conference call of Rocking Deals Circular Economy Limited, where we aim to delve into our exceptional performance during H1 FY25. Before we delve into the specifics of H1 FY25, allow me to provide a concise overview of our company. Since our establishment in 2002, we have emerged as a pioneering B2B e-commerce company that transcends traditional business models.
I'm so sorry to interrupt you, Aman, sir. Hello. Very sorry to interrupt, sir. Actually, your voice is a bit low. Can you please increase your volume and talk, sir?
All right. Can you hear me now?
Yes, sir. So sorry to interrupt, sir. Please go ahead. Thank you.
No worries. Am I a little louder?
Yeah? Yes, sir. You're good. Please go ahead, sir.
All right. So I'll begin this. Okay. Since our establishment in 2002, we have emerged as a pioneering B2B e-commerce company that transcends traditional business models, creating a sophisticated bridge between premium brands and value-conscious customers and buyers. At the heart of our mission lies a profound commitment to the circular economy, a revolutionary approach that transcends traditional business models by embracing the 4R principles: reduce, reuse, recycle, and recover. In a global market estimated at $2.1 trillion USD, we stand at the forefront of a sustainable economic revolution. Our comprehensive approach goes beyond mere commerce. We are architects of a new economic paradigm by managing excess inventory, enabling pre-owned products market, recycling e-waste, and facilitating innovative barter exchanges. We are demonstrating that sustainability and profitability can coexist in harmony. With 30-plus brand associations, over 4,000 customers served, and more than 5 million products sold across 18 different categories, we have built a robust operational foundation supported by our 4 warehouses spanning 65,000 square feet and dedicated team of over 110 professionals. Strategic partnerships have been instrumental in our growth. Established partnerships with Bajaj Electricals for over 2 zones and obtained rights for prestigious brands including Skechers, Hindware, Liptor, Marshall, Dyson, and Boat. Our excess inventory management capabilities have made us preferred partner for companies like Fab India. We have established a joint venture with UTC Digital Technologies, holding a 58% stake in an entity focused on reverse logistics, trading, and refurbishment. Our business expansion strategy includes a robust pipeline of 20-plus potential brand tie-ups and partnerships, strategic agreements with Puma and Fab India, planned international expansions starting with Dubai, and we have established extensive coverage across metropolitan areas with a strong presence in Tier 1, Tier 2, and Tier 3 cities, and a targeted focus on northeastern market. We have developed a groundbreaking 360-degree circular economy solution that sets us apart in the marketplace. Our evolution towards full-stack e-commerce capabilities encompasses strategic inventory acquisition, rigorous quality control processes, multi-channel sales optimization, and end-to-end refurbishment services. Perhaps most notably, we have achieved exceptional inventory control with less than 1% write-offs, a testament to our operational excellence. Also, Barrier Vertical is helping us leverage opportunities and achieve potential growth. Operational excellence remains our cornerstone. As the first mover in Amazon refurbished category, we are developing comprehensive circular economy solutions, advancing e-commerce capabilities, and implementing sophisticated inventory management strategies. The global circular economy landscape presents immense opportunities. Currently, only 8.6% of the global economy is circular, with approximately 100 billion tons of raw materials extracted annually and 50 million tons of e-waste generated, of which nearly 20% is recycled. By 2030, the potential economic benefits are estimated at $4.5 trillion. Our market segments show promising growth. The e-commerce market is valued at $29.5 billion. The off-price retail market is projected to reach about $606 billion by 2031. And the refurbished electronics market is expected to double within 5 years. The financial performance in the first half of FY25 has been nothing short of exceptional. Our total income reached 21.40 crore, representing a robust 36.81 year-on-year growth. Our EBITDA surged by 128.40% to 5.23 crores, with margins expanding by 980 basis points to 24.45%. Profit after tax witnessed a remarkable 122.14% growth, reaching 3.2 crores, with margins improving by 573 basis points to 14.93%. Our earnings per share have increased by 46% to 5.65 rupees, and underscoring a strong operational efficiency and sustained profitable growth. Looking forward, we are optimistic about our growth trajectory. Our goal is not just to participate in ecosystem, but to be its leading innovators and change makers. Our optimism is anchored in strong market fundamentals, a robust financial position, a clear strategic roadmap, and expanding market opportunities. Before the Q&A, I would want to thank our stakeholders for their vital growth in our growth. Your support drives our success. We remain committed to delivering value, pursuing opportunities, and ensuring sustainable growth and market leadership. With that comprehensive overview, I would like to open the floor for questions. Thank you for your attention. Thank you.
Thank you so much, sir. Ladies and gentlemen, we will now begin the question and answer session. If you have any questions, please press star and 1 on your telephone keypad, and please wait for your turn to ask the question. If you would like to withdraw your request, you may do so by pressing star and 1 again. Our first question comes from Agastya Dave from CAO Capital. Please go ahead.
Thank you very much for the opportunity. Am I audible?
You're audible,
Yes,
sir.
you
Please
are.
go ahead, sir.
Okay, great. Thank you. Which appeared very different in this first half, right? Your gross margins and your EBITDA margins have just exploded.
We could not hear you
and-
initially. Could you please repeat the question from the beginning? We could not hear you
Okay.
initially, whatever you said.
Okay. So there is something slightly different in this first half. Your EBITDA margins and gross margins have just exploded. And so I was expecting slightly higher revenues and significantly lower margins, but you have surprised massively on the margin side. So can you go into a slightly more detailed analysis of what exactly happened? Is it like the 40% gross margins and 24% EBITDA? There is at least 1,000 basis point improvement in both of them. So in gross margins, you have improved by 1,800 basis points. So exactly what has happened here? Is it a change in product mix? Is it something else? Can you provide some qualitative understanding on what exactly happened here?
So we got great deals where we could make more profitability. And at the same time, barter was one vertical we launched, which has given us great margins and great profitability. So that's the overall view around it, because we are more of a brand where we're looking for deals where we could offer it to our customers and then make more profits around that. So we got better deals, better reach, and we could get better margins over it.
So should we take this 24% EBITDA margin as the base now to work with, and going forward you will oscillate in and around this level or improve upon this level? How should we look at the sustainability of this margin number?
It may fluctuate. It can go up, it can go down, it could remain the same. It all depends on the brand tie-ups and brand commitments that we get. Looking at the pipeline, we see a lot of great brands partnering with us, but I will not say that it's going to go up or go down or remain the same. We are looking at a great business in the coming time.
Okay.
So my answer is it could fluctuate.
But fluctuate around 24% or fluctuate around 14%?
It could be anywhere between 14 to whatever is the highest. I mean, I will not give you a number on that. But
Okay.
yeah, surely we are looking at a great future. And there are too many, like I said, there are too many brands in the pipeline. We've been talking about brand tie-ups and new verticals that we've been going to be launching. We've seen a lot of brands that want to tie up with us in and out of India, and we see great traction coming in and great profitability that we are looking at. But then I cannot give you any number on a call.
Understood.
Because that would be wrong. That would be not the right statement. Yeah.
Oh, perfectly fine, sir. So next question is on the seasonality of the business. So obviously Q3, Q4 would be heavier. So what the kind of seasonality we saw in the revenue breakup between H1 and H2 last year and the profitability last year? Again, should we take that as a given? Is that a constant function of the...
It's a given, 100%. Yeah. 35-65 is the ratio generally. So first, H1 is always lower and H2 is always higher because of Diwali sales and Christmas sales and all of the, if you look at the Indian dynamics or Indian economy, it's always heavier on the side where Diwali is and the celebrations and the whole country is buying more. The more they buy, the more stock is available for us to sell it at great prices to our end customers and our partners.
Understood. So how is your Northeast operations going along? As per your expectations, better than your expectations? And have you...
I'm sorry, I did not understand the question.
Your Northeast expansion, Sam, how is that going along? Is it as per your expectations?
I would love to, as my brand name, Rocking Deals, I would say it's going rocking. We're doing very well there. And
Okay.
It is better than the expectations that we had. And we are planning to open a lot of our partner franchise stores in Northeast. As we speak, in the last 2-3 months, we've opened Lunglai and we've opened Himachal, which is not Northeast, but then we're opening many new stores, and many new stores are in the pipeline in the Northeast. So Northeast for us is actually doing much better than North. And we are very excited and very, very, very happy with what's happening there.
Understood.
The customers
One
have
final question.
actually accepted us with open arms, and we're getting great demand of our products in Northeast.
Very good. So one final question from my side. It's about the consumer sentiment and the outlook for your company. So what we have seen this quarter across all consumer brands and all consumer companies, there has been a very visible slowdown. And Diwali sales have also not been that great. But there are, again, indications that there are certain niche business models which are doing well, where the company or the brand is providing value. So you are one of them, right? So how do you see the consumer sentiment from where you are standing? And what is your outlook for the next half? Would you like to quantify, give some sort of quantitative guidance? Even some qualitative commentary would be appreciated.
Aditya, the more product sells in India or globally, it's great for us because the more it sells, the more inventory is going to be in the 7-day, 14-day, seconds category. Number one. So it's great for us if more sells. If lesser inventory sells, that means there'll be a lot of excess inventory available at great prices that we can buy and we can give it to our customers. So in our line of business, both the things are very, we are very happy both ways. If it sells too much or if it doesn't even sell. So the people who are not able to move it, they'll be giving great deals to just liquidate their inventory. And that is the reason why we feel that it's a win-win for us on both the way.
Both scenarios.
It's doing very well or it's not doing very well.
And any commentary on the outlook for the second half and next year?
I'm sorry, I missed your question.
Any commentary on the outlook for the second half and next year?
Second half is going to be better. Next year is going to be much better.
Great. Thank you very much. All the best.
Thank you. Pleasure.
Thank you, sir. Our next question comes from Disha Agarwal from VT Capital. Please go ahead.
Hello. Hello.
Hi, Disha.
Yeah, good afternoon, sir. So, my first question is, can you please let me know the revenue split between the B2B and the B2C business? Hello.
Hi, Disha. You'll have to be a little, your voice is not very clear, but then I understood the question. It's 80% B2B and 20% retail, B2C. And the merger is going on, so it's going to be a different split later on once the merger is done. But as of now, it's 80-20.
And so going ahead, what are we expecting from B2C business? From 20% to what percentage we are targeting?
It's going to grow exponentially because we're opening more and more stores and more franchise stores across the country. So we're looking at the margins. Our target is to be at least, it should be the other way around, 80% B2C and 20% B2B is what we wish to have with more and more stores across the country.
Okay. Sir, any plans of inorganic growth or acquisition that our company is planning?
No, not at all.
Okay, sir, in the last call, you had mentioned of 20 brands in your pipeline. So as of now, how much we could convert?
We have converted Fab India. We've got a tie-up in a brand agreement with them, which has been updated at the stock exchange as well. So Fab India inventory, which is going to be excess inventory that needs to be sold at a discount, will be available at Rocking Deals, would be with Rocking Deals. And we're the only partners. They're not planning to open their own factory outlet, so we're going to be the ones selling those inventories. That's one. That's one of the major ones in the country. And at the same time, we have a lot of the other small brands that we've tied up with. But overall, if you look at it, this is one of the biggest brand associations that we've signed up since the last call.
Okay. So, likely we are seeing our profitability improving, but our cash flow from operations seems negative. So when can we expect this to go positive?
Disha, since mostly we open franchise store and money doesn't go in capex and profits gets reinvested into the inventory itself, that is the reason you are seeing cash flows, negative from operations. But till we are growing at a faster rate of 100% CAGR, cash from operations will continue to be negative for at least a year or two.
So that is majorly because of the inventory, right?
That's right. Because, we retail stores, we open more and more franchisee stores. So whatever the internal accrual comes, they get reinvested into the inventory. So till my increase in inventory levels is not less than my internal accruals, till then getting cash flow positive from operation is better.
So any major reasons for degrowth in our revenue, and how are we planning to scale this up and at what rate?
There is no degrowth in our revenue, Disha. It's a 50% YOY growth.
It's majorly because of the seasonality that we have seen. So quarter on quarter comparison won't be good for our company, right?
Generally how we see H1 and H2. H1 generally accounts for 35% and H2 accounts for 65%. And with H2, Diwali, Christmas and quarter 3 being heavy and quarter 4 also being heavy in liquidation industry, generally H2 of last year versus H1 of the next year is not the right comparison.
Okay. And so wanted to know our entry barriers in the business. So is there any exclusivity when we come up with the agreement with any specific brand? Like we know that unorganized market is huge. So where do we stand apart from that, so that any brand who wants to partner with us would choose Rocking Deals and not any other partner?
Disha, if you look at it, there is no other brand per se in India which has been doing this for a fairly long time. In this line of business, the most crucial thing is the trust. Like I always say, if you get any global, let's say one of the world's best brands, at great prices and you see it on Instagram or wherever, even in a retail store, you will be very, you will not be very sure that you want to buy it also or not, because you do not trust the brand who's selling it or the shopkeeper who's selling it, because it might be fake or it might be a copy or it might be something where there might be a problem in the product or something. That's why they've been selling at that price. So there's a taboo in India. So what we've been building up for so many years is that no matter what we offer, the product is original, genuine, and it's been sourced from the brand. And all of the brands want a vertical where all of their inventory doesn't go in the trade, because they all are majorly, most of the brands which we are talking about are very solid and very strong in their distribution model. So no brand would want their discounted or their any product which is discounted to go to their retailer who's already selling their brand new inventory, which is the regular inventory in the market, and spoil the market or the distribution model. So the vertical that we're talking about is a win-win for all the brands. Why? Because the inventory is going to the end customer, is going to the end partner who's going to be liquidating or using it for themselves. So it doesn't really disrupt any distribution or any market. So overall, it's a win-win for not just us, even for the brands, and then that's how we take this business forward. So the entry barrier-wise, overall, we don't see any entry barrier, but then we have a lot of people which are selling products at who are not doing the right business in the right way, because they don't have brand ties, so they're not selling it to the end customers, and they are doing a lot of the unorganized or fake or copy products that are really spoiling the market. So we're very, very different from that, and there's nobody else doing this. There's no off-price retail brand in the country per se. So we were doing this in the right way, and we see a lot of traction and a lot of, the future seems to be very bright for us, as that trust factor we've been building up over many, many years now.
Okay. Thank you so much for that, Vipin.
Thank you, Disha. Thank you for your time.
Thank you so much, sir. Our next question comes from Prince Chaudhary from Pink Wealth. Please go ahead.
Hello? Am I audible?
Yes, Prince, you are.
Yeah. Hi, sir. Thank you for taking my question. Firstly, I want to understand that Northeast is a new market, or we already have stores over there?
We already have stores there. We have 2 in Mizoram. We have 1 in Mumbai. We have 3 in Mizoram, and we have many other partners who are buying from us and selling there. We've just opened 1 in Guwahati ourselves, which is like more of a warehouse come retail store. So Guwahati has been the new, store we just launched 3 months ago. So overall, our presence in East, where we are ourselves present, is totally new. It's just happened now. But there have been customers and vendors and partners who've been buying from us for a very long time in the Northeastern market.
So what are our plans going ahead, like number of stores which you are going to open in coming 2 years, 3 years down the line?
I'm not able to understand your question. Can you repeat your question, please?
Sorry, I want to understand, what are our expansion plans in the Northeast market, like number of stores which we are going to open in coming 2 years or 3 years down the line?
We see at least 20 new stores being opened in the next 2 years. As we speak, we have a lot of partners who are willing to invest and open franchise stores by the name of Rocking Deals. So there are a lot of traction, a lot of people are interested. So we see the way that the people are inquiring about our business model. We see at least 20 more being opened in the next 2 years. But that's still a tentative number. You cannot hold me for a number. 20 is what we feel is going to be a comfortable number, we feel.
Okay, and are we planning for debt raise or from market to fund the opening of the stores?
No, we are not, because it's majorly going to be franchise stores. So we're not looking to raise anything against that.
Okay. And also, if you can provide the breakup of unorganized versus organized market, like what is the percentage distribution?
India is, I would say 99% unorganized, 1% organized. We are the only ones who are organized in this off-price retail business.
Oh, okay. So, sir, if you can tell
Generally,
me, like,
brands have factory outlets which are owned by brands or their partners. There's only one brand being sold under one from one store. Like it'll be a Puma factory outlet or a Adidas factory outlet or something like that. But then overall, if you look at factory outlets, there's no offline price retail brand which is anyway selling 10 different brands under one roof as a factory outlet brand. There's nobody else doing that currently.
okay. Sir, I want to understand, like, if I'm owning a brand, say example XYZ, which has a Whirlpool type, so being a brand or to at least have a stability of my brand, I do not want my products to enter the local market with local low prices. So is there any exclusivity agreement with you, like if in case if I even if I want to sell, say suppose 1,000 washing machines at lower prices than what my original brand is selling at. So is it like I will sell it only to you or I can sell it to anyone? Is there any specific agreement with you, with the company?
I actually did not get the question correctly. Could you, raise it again? I mean, did not get it exactly. I mean,
Sir, I want to understand. Suppose I am a brand, okay? And in case if I want to sell my Whirlpool, 100 Whirlpools at lower prices, it just due to some because the goods are not up to the mark. So, is there any exclusive agreement with you? Like, if I want to sell that 100 at lower prices, I will sell it to only to you, or I can give it to any other brands also, other companies also.
if you're a brand, you could do whatever you want to do. I mean, it depends on you. You want to do an exclusive with a partner who sells it to the end customers and doesn't spoil your brand name. It's your call. Or you would like to do something where you're open to any price from anyone, whoever gives a better price, you'll just go ahead and just liquidate that. So it's your call. I mean, there are brands which are happier doing exclusive agreements. There are brands happier doing agreements with one particular company who makes sure that the terms that they want are followed. So it all depends on the brand what they want. But generally, there are a lot of brands which would come to you and say, "Well, do not sell this online, or do not distribute it in the retail market, or just sell it through the stores, or just do not sell in India." So there are a lot of different asks from different brands, depending on their inventory and how it is. So when you're saying a brand with inferior quality of inventory, now inferior might be a problematic inventory also. So it all depends. If it's problematic, then we'll have to refurbish it, make sure it's working, and then sell it to the end customers. So a lot of companies or the liquidation companies in India which are there, they do not have, they're majorly just trading or they're just retailing, but not all of them are able to refurbish it, make sure that it's in working condition, add warranties to it, and sell it to the end customer. So there are a lot of value adds that we provide, but it's the discretion of the brand how they want to play it. Most of the brands are getting intelligent and they would want to sell it to a very legit and a very solid brand, which is going to follow the terms that the brand wants, how they want that to be sold. So that all depends on the brand, how they want it.
Okay, sir. All right, that answers my question. Thank you.
Thank you for your time. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad, and please wait for your turn to ask the question. Our next question comes from Mr. Amit Agicha from HG Hava. Please go ahead.
Good evening, sir. Am I audible?
Yes, you're audible, sir. Please go ahead, sir.
Thank you for the opportunity and congratulations for good set of numbers. My question was with respect to the inventory. Like, how does the company mitigate risk associated with inventory management, especially for open box and refurbished categories?
All right. So we've been doing this business for a very, very long time. I mean, I would say that the only thing that we have learned, Amit, is, mistakes that we've done before, not to repeat them again. So we're very strong in buying, pricing, and selling, and that's the actual formula where even billion-dollar companies trying to enter India have failed. So the whole recipe of buying at the right price, grading at the right price, and selling it to the end customer at the right price so that it's an exciting deal for the customer as well, is what the whole recipe is. And this is what we've learned over the years. And good part is, it's just not me doing it. Even the first employee that we had when we started this is still working for us. So most of our team is the most experienced team in the whole country, and the most experienced people who have been doing this since the whole business of this whole vertical started in India. So my answer would be that that's how we, mitigate the risk. And this is what we've learned, how not to make losses and what to buy at what price so that there's no loss for the company.
Hello? Hello?
Yes, Amit.
Hello. Yeah, I also wanted to know the existing number of stores because I heard that 20 new stores are being planned for the next 2 years. What are the present number of stores?
20 stores were planned for Northeast. In Northeast, right now, as we speak, we have 4 stores. And about 10 different partners who are buying from us.
4 stores you're saying, right? FOUR?
We're talking about Northeast. When I spoke about 20 stores, I spoke about Northeast. Northeast part of India.
Yeah, I heard that.
Not overall India.
Okay. What are the number of stores in overall India?
Overall India, we have about 40 retail stores to whom we are partnering, who we are supplying our inventory to. So a lot of them are not just buying from us. They also buy from the local market. But overall, company-owned stores that we own are about 10 stores in Delhi NCR and across the country.
Thank you. And can you give some details about the Dubai operations?
And the plan is to open about 100 stores in the next 2 years overall throughout the country.
Okay, that was very helpful.
But not company-owned, franchise-owned.
Okay. And can you share some more details about the Dubai operations planning?
So there are a lot of websites in the Middle East which have been inviting us. I cannot take the names, but the biggest ones which are there, they're inviting us to come there and set up they would want to launch the refurbished category, so they want us to supply to them. At the same time, they would want us to, they're also looking for partners who could liquidate their excess and their customer returns as well. So there's a lot of traction we've seen from the e-com companies in the Middle East. And that is the reason why we've had we've had many meetings with them as well, both in India and in Dubai as well. We're setting up a company so that we can get into some agreements with them so that we can start the whole excess inventory and certified refurbished category out there.
And last question is can you share some insights into your e-waste management strategies and their contribution to the revenue?
So yes, we have applied for the license. Once we have the license, we will start refurbishing. We're anyway refurbishing a lot of the inventory. So now, as per the new law, even refurbishing is also under the e-waste norms. So if we're able to refurbish something and make sure that it doesn't get, it doesn't get wasted or it doesn't get, the life finishes for an electronic product, that's also under e-waste. So we've applied for the license. It should be with us very, very soon. We're already refurbishing, so it's not that we're losing out on anything. We're already refurbishing, which is under the e-waste norms of the country.
Thank you for answering my question. The last question, if I may, are there any plans to diversify into additional verticals beyond electronics and fashion?
Yes, Amit, we're doing furniture. We've already started furniture. We're doing it in a very good, we saw great sales over Diwali. We are partnering with major brands, global brands for IT and telecom as well. So IT and telecom is something we're going to start again, but partnering with the global brands that they would want us to sell their inventory. Furniture, I told you, which is also a massive category. Plus, we're also planning again to start FMCG, which are, products which are closer to expiry because we have such great traction of customers. We see that's going to fly very, very well. We stopped that in the middle, but then we are planning to set that whole vertical once again. So these are the three things that we are kind of looking forward to start in terms of the verticals that we have. Just at the same time, whatever verticals that we are already doing, we have a lot of tie-ups which are in the pipeline. Once they are there, we will update the stock exchange and you'll have all the information from there.
Thank you for answering the questions in great detail and all the best for your future. Thank you.
Thank you so much. Thank you.
Thank you, sir. Our next question comes from Yashowardhan from Tiger Assist. Please go ahead.
Hello. Am I audible, sir?
Hey,
You're
yes,
audible.
you are.
Yeah. So I'm fairly new to this company. So can you touch up a bit on the value chain and, our material sourcing?
I just heard value chain and sourcing. Could you repeat the whole question?
Material sourcing.
No, could you repeat the whole question, please?
So I'm fairly new to this company. So can you help me touch up a bit on the value chain and our material sourcing?
Sure. Can I get your name once, please?
Yashowardhan.
Yashowardhan. All right, Yashowardhan, we are a circular economy company which covers anything where we are able to add life to a product. So it might be a excess inventory product. It might be something which is box damaged in transit, 7-day, 15-day returns, e-commerce. It could be a pre-owned product as well. So the bridge between something which is not okay for someone going to somebody who's very, very willing to buy that is the bridge that we're trying to build. So circular economy is more of a, you must be seeing a lot of the factory outlet brands and off-price retail brands across the world, which are selling a lot of the inventories which are branded inventory at great prices. So we are trying to do that. Not trying, we're doing that business for a very, very long time in India. Now, the value add that we are giving to our customers is that we're supplying them genuine branded products at the right price and a good price, best prices, which are coming directly from the brands majorly. And the value add that we're giving to brands is that we're not spoiling their distribution or their brand name because we're giving heavy discounts on their products as they're going to our end customers or partners who are using it, the end users, so that it's not really spoiling their brand image or brand name. And so the value add is where, the whole supply chain is where a brand which might have excess inventory or something which is a little, I would say, seconds or unboxed, all of those inventories going to the end customers. is what the whole value chain is. And there's no brand in India which would not have excess inventory or anything which is a little damaged in transit or 14-day returns from the e-commerce platforms. At the same time, a lot of the brands also want to run their trade-in programs, upgrade programs. So all of that comes under circular economy, and those are the things that we are doing.
Got it. So very well explained. Also, so what is the client acquisition process and the approximate timeline to acquire a client?
To acquire a what? A client.
A client.
Oh, we don't have. No. We don't acquire clients. We acquire inventory. So we partner with the brands like Fab India or like Bajaj. We have partnerships with a lot of the brands like that. And we commit to them their inventory is going to be sold to the end customers or the way they want us to sell it. A lot of the brands don't want us to sell it online. A lot of the brands do not want us to distribute the products to their local market or the distributors. A lot of the people want us to put stickers and say that there's no warranty on the products that they're selling. So when every client has their own terms and following those terms and supplying to the end customers is something that we have been doing. And like we've been seeing for a very long time, there is no brand which is not interested in this kind of business. And we're seeing a lot of traction and a lot of brands who are coming up to us, and they are wanting to use our channel to liquidate their products and their inventory.
All right. Got it. So what is the industry size and growth you're looking at?
Globally, it's about $2.1 trillion business. Did you hear me?
Hello?
Did you hear me?
Yes, sir.
Hello.
This is
$2.1 trillion business globally.
Okay. And any government initiatives for the same, like in this space?
I'm sorry, I didn't get your point. I'm sorry. Ishwar.
I'm meaning to ask if there are any government initiatives that you foresee for the same.
Of course. The whole world is talking about sustainability. If you look at the UN sustainable goals, there are 17 sustainable goals that UN has. Out of the 17, 11 are something that we are doing ourselves. So the whole world, if you look at any superpower or any president, prime minister of any country globally, they all talk about sustainability. They all talk about climate change. They all talk about, saving the planet. So anything and everything that we're trying to do is around that only. Just one simple, idea for you is that every pair of jeans that might get scrapped is about 7,000 liters of water is being used to make one pair of jeans. So if you talk about electronics and if you talk about a lot of other things, this is the kind of, we're saving the planet in one way or the other, and the government is really, really, not only in India, globally, there's so many norms and so many rules and regulations that are coming out. So there's a new law where there's going to be a digital passport for every item that is going to be imported into EU. So anything that's, let's say you're making a shirt, every item that is being used to make a shirt, there has to be a digital passport where the whole life cycle of that product has to be mentioned and it has to be there. So there are a lot of initiatives globally. India is a little far away, but then we see a lot of, government is going to be playing a lot of, it's going to be a vital role. And we see a lot of changes happening in the government of India as well. But globally, we see a lot of traction, a lot of new laws that have been coming out.
Got it, sir. Thank you so much. And all the best.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. Our next question comes from Shivam Singh from Vibrant Ventures. Please go ahead. Shivam sir, please go ahead with your question, sir. Seems like he has withdrawn his request. Shall we move on to the next question?
No.
Our next question comes from Rahul Arora from Fairwell Advisors. Please go ahead.
Yeah. Sorry, sir. The question is, I want to understand your revenue bifurcation. So what I'm getting to understand from your discussion that off-price retail and refurbished would form major. But I see your presentation, you have mentioned about the reverse logistics, barter. So what are the contribution and how are this vertical looking at?
So these verticals have been really, we've been we're very bullish about it, and we see a lot of traction there. A lot of the inventory that we're not able to move, or a lot of the inventory that brands or people are not able to move, they're able to bring that in and exchange it with the inventory that we do not, maybe the customers are kind of bored with that inventory and they do not want to buy it. So barter has been very, very exciting for us. We see that growing exponentially. At the same time, we also started a vertical for events where we were doing a lot of events where there were customers in great numbers coming in. So that vertical also did very, very well for us. So we've seen a lot of new verticals which are doing a lot, which are very fruitful for us, apart from the regular basic models that we've been following over the years.
Okay. Let's talk about your UT3 digital technology. How does it help out in terms of synergy and what kind of contribution it can do to our overall business?
So UTC has brand partnerships with companies like Samsung, LG. They have partnerships with a lot of different major brands across the world. Whirlpool, they're with Godrej, they're with many, many major brands here. What they're doing is that any product that you want to trade in, they use their technology to derive the price of the product. Even if you go on the major websites of these big brands, you'll see it's been powered by DG2L, which is UTC. So the whole category or the whole business model of pre-owned, we wanted to use tech in it. We wanted to use some major, we wanted to enter that category in a very good way because we've seen a lot of players who've lost and bled badly in the pre-owned category in India. Even when we were doing business with Amazon initially, where we were partners with them for the trade-ins of old phones, where if you say you want to trade in your old mobile phone and buy a new phone, that whole model was, when it started, we were one of the major partners with Amazon at that time, and we saw that the quality of the product that was coming back was really, really bad, very inferior. So pre-owned as a category, we understood that it's something where we need to be very solid in terms of technology, and it has to be with the brands directly. So that's the reason why we partnered with the UTC. They have brand tie-ups and brand agreements with a lot of major global brands like Samsung, LG, and many more. So that's why we partnered with them.
Thank you. Last question from me. Since you're talking about a lot of brand tie-up, we're talking about new vertical, and overall the segment is quite exciting in terms of growth and in terms of sustainability. Especially last 3 years, your CAGR growth top line is more than 50%, your profitability growth is more than 20%. So can we expect similar growth actually next 2 to 3 years in terms of top line at least? More than 50%?
Yes, that's what the plan is, and that's what we're working for.
Okay.
And we're looking for that.
Okay.
But on a call, I can't commit to any numbers or give you any.
No,
but
that's fine.
the target is that we see good we see a lot of traction. We see a lot of brands getting excited. They're learning global rules and laws are making a lot of the companies understand that this is a requirement and this is the future for India. And we're looking at 100% CAGR for sure. But then, yes, Not just that, we see a lot of traction coming from the brands also and from the customers also. So it's a 360-degree, excitement, demand that we're looking at from both the supplier side and from the buyer side.
Great. I think that is, very exciting to say at your end. I just one question, a follow-up question from a previous participant about your range of margin that you expect. The 14 you mentioned and plus highest to 24, 25. That is huge. As an investor, can you share some ballpark realistic range where we can work with in terms of margin? So, if you can please.
Minimum 10%. If you're looking at the worst case scenario, minimum 10% would be there. But then there's no limit to it. It can go up much higher.
Okay. I think we can talk about not best case or worst case, a fair case scenario. Business as usual. What kind of range we're talking about? I understand the best case would be 24, 25, more than that. Worst case 10%. But if it's about the fair case, right? Business as usual, then what would be a range for that?
The PAT level, we're confident that we could do about 10% on a PAT level. Yeah.
Perfect. Great. Okay, that's it. Thank you so much.
Pleasure. Thank you for your time. Thank you.
Thank you.
Thank you, sir. Our next question comes from Neeraj Khaitan from VT Capital. Please go ahead.
Yeah, hi, sir. I wanted to understand, do you face problem regarding the debtors, as in, do you face any bad debts in your debtors or the time in which they pay back to you when you supply them the goods?
Our business is mostly cash and carry, Neeraj.
Okay. So that problem is not there.
And we have no problem at all. We've never had any bad debts because we're very, very sure about what.
Okay, sorry to interrupt. Please carry on.
Yeah, so we don't have any problem like that because we don't give out much.
And what is the time? What is the time in which you get your payment?
Maximum a month.
Okay. And I see that the inventory has piled up year on year, but since March it has piled up only by 6 crores. So that's the preparation for the H2 FY25?
It's a regular cycle. We get a great deal, we buy it. So let's say our business is also to do with, let's say right now it's winter. If I'm able to get a great deal on air conditioners, I'll buy it now and I'll store it now. And when summer comes in, we'll make 20-30% margin on that. So that's the whole gameplay. That's how we play. So initially, we must have bought a lot of the apparels, which were winter wear. But over the years, over the whole year, we collected all the winter wear, and now, right now, it's totally flying with the great margins that we have. So that's the whole gameplay. So our rotation of the inventory is a little slow, but then we work on higher margins. So that's the whole strategy is. Unless we're buying something in winter and we're selling in winter, like we are right now.
Okay. Fair. That's on my part. Thank you.
Thank you so much, Neeraj.
Thank you, sir. Our next question comes from Deepak Podar from Sapphire Capital. Please go ahead.
Yeah, hi. Am I audible, sir?
Yes, Deepak, you are.
Yeah. So my first question revolves around, if I see your top suppliers or top clients, a company like New Jessa, appears among the top companies. So a company appearing both in suppliers and on the client side. So what exactly we are doing here? Are they providing
There was a barter deal with New Jessa. We bought and we sold to them. We bought X products and we sold Y products to them. So it was a barter deal we did with New Jessa.
Okay. So is that,
and that was last
year-on-year phenomenon?
And that was last year.
Yeah, that was last year. So is that a year-on-year phenomenon, or is it just one-off types?
No, that's one-off. I don't think we've done any deal with New Jersey this year.
Okay.
In the first 6 months also, yeah.
Okay, understood. And you were answering something on the revenue CAGR. I mean, we are looking at 50 to 100% growth for next 3 years CAGR. Is that what you meant?
Yeah, we are.
50. And this year, I mean, the growth is on the lower side, right? Given 35-65, your growth won't be more than 30-35%. You have to follow that 35-65 kind of a first half, second half.
It'll be the same because more and more partner stores are opening and more brand types are happening. So we're looking at the same. It's going to be at least 100% for sure.
For this year as well?
Yes.
For this year as well, I mean, your second half has to be much better. I mean, the growth has to be much. Okay.
Yes.
Oh, okay. I think that would be it from my side. Thank you so much.
Thank you.
Thank you, sir. We have a follow-up question from Amit Agicha from HG Hava. Please go ahead.
Yeah, thank you for the follow-up opportunity. Sir, in the FY24 H2 presentation on slide 33, it shows that B2C contribution in revenue has was in the range of 3% or 2% or 1%. And in the current con call, I just heard, I think so, B2C is 20%. Did I hear that correct?
Yes. Earlier we were primarily a B2B company. Now since we are merging our group companies and all stores are also coming under same company, B2C portion is increasing, and going forward also it will continue to increase.
Yeah, because in the present investor presentation, I think so that kind of a slide is missing. Anyways, thank you for the answer. Thank you. All the best.
No problem. We will make a note and we will see if any correction is required. We will correct it and re-upload it.
We've also updated the national system. It's updated. The stock exchange fee we've updated, so.
Thank you.
Yeah.
Thank you, sir. We have another follow-up question. It's from Ashwardhan from Tiger Assist. Please go ahead.
So just one follow-up. Can you give a bit of a guidance on the market share and the growth you're expecting there?
See, for our company, as we said, we are planning and trying to achieve 100% CAGR, but not too many formal reports and not too many organized players are available, hence we will not be able to comment around our market share.
But if you talk about global business, there are a few companies I'll name for all of your information. There's a company called Poshmark, which is valued about $3 billion. They just launched their IPO. There's a company called Brand for Less, which is in Dubai, which has been valued $1.2 billion, and they just raised about $350 million from TK Maxx in the US. Depop is about $1.6 billion. Etsy is about $494 billion. So these are a few companies in our line of business, and all of these companies are majorly into the same off-price retail, trade-in, refurbishment, and selling those products to the end customer. So what they're doing is majorly either apparels, but we're doing many other categories as well. And if you look at those brands, because these companies are majorly in the first world war, first world countries, people do understand the category, refurbished or excess inventory. India, once people do get to know that, looking at the economy that we are and the hunger for deals that we have as being Indians, we see ourselves much bigger than all of these companies combined. It all depends. It's a lot of hard work that we are putting in, and we've been working for many years. So we see great future both on the supply and on the sales side, because we are genetically made to get great deals. Indians want to save money on anything which is a branded product at the right price is what we're all looking at. So we see a win-win solution, and we see great future for Rocking Deals in this line of business.
Got it. So who do we consider as our peers in India?
No, there are no peers in India. No one is doing this business organizedly at this scale.
Okay. Thank you.
Thank you, sir. Ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. I repeat, ladies and gentlemen, if you have any questions, please press star and 1 on your telephone keypad. There are no further questions. Now I hand over the floor to Mr. Kaushal Shinde from Confideleap IR for closing comments.
Thank you everyone for joining the conference call of Rocking Deal Circular Economic Limited. If you have any queries, you can write to us at info@confideleap.com. Once again, thank you everyone for joining the conference.
Thank you so much, sir. Ladies and gentlemen, this concludes the conference call for today. Thank you for your participation. You may all disconnect your lines now. Thank you and have a pleasant evening.